Hey everyone, I'm Stephen Kalayjian and welcome to Back to the Futures. I'm here every Tuesday and Thursday from 1:30 to 2. Welcome. Wow, what a day we had here today. The S&P futures were trading around the 57.55. NASDAQ futures were trading around the 19,000, I would say 19,000, about 970, and boom. Out of nowhere, NVIDIA exploded from the 116 all the way up to the 121. NASDAQ futures ran 20. S&P futures ran north of 30 off the lows of the day. You know, today's theme is is the sell divergence. Excuse me, the sell divergences on the 60-minute time frames. We're making new highs and looking at the underlying ETFs, the 60-minute time frame that I'll show you on the QQQs, on the Russell, on the spiders, and on the diamonds are making new highs and non-confirmation. Just for example, the Dow around, let's see here. Yeah, we got all sell divergence on all the 60-minute time frames. So what happened today? So all morning long, a lot of my viewers are saying, I want to short them, I want to short them, I want to short them. We got one great short on a pattern early this morning, 68, 57, 68. I called the range 58, 68 to 73, 74 range. Got up to 70, and then boom, they dropped 15. And then I basically just waited, and then all of a sudden, out of nowhere, at around 11 o'clock, we got the big buy reversals on my indicator 4 on the 15-minute time frame. It correlated with the spiders on the end. This is the exactly what happened here. I'll show it to you here. Right here, you got the big buy reversal right here on the 15-minute time frame on that big bar, that big pencil up there off the 15. Caught a nice couple little longs here off the 3-minute right here, and then the real nice pattern that happened, which is the first pullback on the 15-minute time frame after the 15-minute time frame correlated with the continuous contracts with the underlying ETF around the 110, 105. You look to buy that pullback, they got down below 82.5, and they ripped up 8-9 handles on the S&P. You know, I've been doing this so long that you wait patiently for these patterns to set up, and that's exactly what you want to do each and every day to be consistent, right? You're looking at the bigger time frame. The 60-minute time frames are still bullish. The Qs just reversed the buy on the 30. So now the 15, 30, and hourly time frames are still bullish on my indicator 4. The spiders are still bullish on the 15 and the 60, and you would need a move up the 30 reverse to buy already. Okay, so now we got all the 3 time frames. So now what you look to do, you wait for a pullback on the 15-minute time frame for long entries. Okay, we have, for example, right now, again, that was a really beautiful pattern. Again, the way I look at the markets, I look at the markets based upon based upon my conditions, the 15 to 30 and the hourly for intraday trading. If you look at other time frames, for example, you know, you're looking at like the daily with the weekly, or the weekly with the monthly, or you could look at the 360 minutes / 480 minute with the daily, or you can use a combination of using like a 60-minute time frame combined with the 360 / 480 with the daily. So many ways, many beautiful combinations, and that's exactly how I look at the market. So my 5 conditions: you can have a trend, a buy reversal, sell reversal, a correlation, and the disconnect. And of the 5 conditions, each has 2 strategies: a buy and a sell divergence. Okay. With that, you know, again, a lot of people from all around the world are hitting me up, and they're really excited about trading futures. And this is a phenomenal pattern here. When you have your MACDs positive right here, yellow over blue, from crossing from below my pivot line, and then you wait patiently for that first pullback using my oversold oscillator on indicator 3. And so again, what happens with most people is they understand the relevance and importance of when you're trading the market, you want to be on the right side of the market, right? You want to have technology before your eyes. You want to be able to increase your trading, increase the levels of trading the market in such a way that will give you the best bang for the buck, right? You want to be able to see the pattern. I have so many people I've taught these patterns to, because basically it took me close to 10 years to build this, and these patterns repeat themselves. I wait patiently for the patterns like today, right? And the thing that's really right now is the big problem here. And let me see if I can bring this up here. That's the next one. You can see we're making new highs here, and these, if I draw my horizontal line, these MACDs are non-confirming on the 60-minute time frame, combined with a significant overbought reading on the daily, right? And then combined with the fact that we're right now about 120, 130 handles from the from the price where we currently are to where the 10-bar weighted moving average on the daily. The standard deviation of that is 50, so we're 80 over. So I'm expecting a pullback in the next 3 to 5 days here. We hit that low on August 5th on the S&P's 5120. We were 380 points, 380 handles, if you want points, from the 5120 to the 10-bar moving average. We exceeded that by about 100. So we went 480, actually 5120, so 50. We actually exceeded 600 points on the S&P since August 5th from that 5120. NASDAQ futures was 17,371. Look at us now, almost 2,800 points higher. Okay, so what's important to realize and recognize that when you're trading the markets, when you're able to see the markets in such a way, and that was a deep, significant oversold condition, 380 handles from the low to here. The NASDAQ was 2,400 points from this, and the standard deviation on the NASDAQ is only like 300. Okay, so now you're 2,600 points away. S&Ps are north of 380. That's why we got that oversold rally. Then about 2 weeks ago, we got the push down to the 54.12.5 level, and we made a low, a higher low, and I do believe we'll get a pullback. Since I got buy reversals on the daily now, that we're going to get a higher low again. Again, a lot has to do with the election come November 5th. You know, whether someone's going to be declared a winner or not on that night. I hope so. But the thing is that what's important is that it's really relative to the understanding that when you're trading the markets, okay, when you're trading the markets, you want to be able to recognize what's in front of you, right? To have the right technology in front of you, to be able to use multiple time frames, multiple indicators. If I tell you this, and I taught this to some of the top people, if you can master the art of divergences, you have mastered the art of trading. It is really super important that you understand these words, because when you understand the importance of using the combination methodologies that I spent nearly 10 years of my life building, it's just really remarkable how things just flow and how things just come right in front of you. Everything I do is based upon visualization and repetition. So for me, it's important that this technology enhances my trading, my ability, and then I'm able to teach in over 100 countries. I stream in over 100 countries around the world. If anybody wants to talk to me or get in touch with me, my cell phone number is 914-500-7484. I literally talk to everybody. I talk to people all hours of the night. I love talking about the markets. I love being able to help each and every one of you. I love the fact that people, especially Tradier Futures, has launched about a few months ago, and it's an unbelievable platform. It's unbelievable with the margin requirements that they have: $50 for micros, $500 for the S&P futures. Very beyond competitive. But again, I give kudos to Dan Raju and the team. They finally listened to me after 4 years. little inside joke there. Okay. But with that being said, it's important and imperative when you're trading futures, you got to adhere to stops, right? You got to learn to paper trade, get familiar with the software, learn how to put your orders in, scaling in and scaling out of a position, very, very important. So I've done my whole life, and I've taught that to so many people around the world, learning to build a position, scale in and scale out. But the most important thing is you got to maintain your stops, right? You got to maintain your stops. Now, some couple of people over the last several months I've got to know, and they've corrected the madness and the lunacy that they would trade without putting stop orders in. Now, I like to put stop market orders in because if it hits, boom, I'm out at the next print, unless it's a fast market, of course. But then if you put a sell limit order in and you have your limit here, let's say S&P's, or you have a sell limit at 85, and then news comes out and boom, it's a limit, right? In a slow market, you would get filled, but most likely. But in a fast market, if it drops down to 81, your now sell limit becomes an offer. You didn't sell it. Where a sell market order, if it trades to 85 and trades 84, you're probably selling between 84 and 85. At least you're out. Okay. So again, try to learn the difference between sell limits and sell market, or buy stops and buy limits. Okay. If you're short. Okay. Or if you want to just go long based upon a condition that you see using the technicals I have or that you have. Right. It's really important to understand the value of technical analysis, right? I've been a technical trader my whole life. I don't look at fundamental analysis at all. When an economic number comes out at 8:30, and there are several of them, CPI, PPI, unemployment, durable goods, retail sales, home sales, whatever, and there's one more, right? Retail, durable goods, CPI. There's 7 of them. But the point of the matter is that once the dust settles at 8:30, when the number gets released, then you can get in. I love pre-market trading. I think pre-market trading is phenomenal. I think pre-market trading gives you the ability to potentially hit your goals in the morning, whether you're trading the 30-year bonds, whether you're trading gold, S&Ps, NASDAQ futures, Russell futures, or the Dow futures. There's always opportunities, okay? I host a show every morning from 8 to 9, and on my stream, and so basically that there, right then and there, gives me the ability to see a lot of great patterns in the futures markets that, a lot of people who follow me during that hour, they hit their goals, and I'm happy. Again, if you could hit your goal each and every day and take money out of the market and know that you just beat the market that day, there's no greater joy. I heard a story about, a little over, about a month and a half ago, somebody was up $9,000 and ended up being down on the day. I mean, come on, you can't do that. I mean, that to me is just like, you just can't do that, And I'm not trying to be pompous or anything like that, but if you're up 9,000 and you blew right through your goal, you want to risk a couple $1,000s. Nothing's wrong with going home with a profit of 7,000, but there is something wrong with making 9,000 and then giving back all that plus 1,000. That has never happened to me. Never. Thank God. I'm very fortunate. Does anybody have any questions here at all? Again, it's really important that you get familiar with the software, learning how to use the ladder, paper trading, learning how to put orders in, building a position, learning how to scale in, whether you're scaling in, 1, 1, 1, 1, or you pyramid 1, 2, 4, 8, if you're doing, the micros or the big ones, right? Same, I take one time note of the time. I don't care about the news or numbers. Exactly. Trader JMB. It's important to let the dust settle, wait till the news comes out, and then you can react. A lot of times you'll see a lot of erraticness on an unemployment number or a CPI number, and you just want to wait for the dust to settle, okay? Again, I love futures markets. I think they're great. I think the margins are great. There's better tax consequences. situations for those. I also believe in my heart that when you're trading the markets, you want to be able to, you really want to be able to identify the trades. And again, all you need really is 2 to 4, 2 to 5 great trades a day, right? You don't need to have 100 trades. You wait for the right setups. You wait patiently. Today, very, very slow comparison. I think during my live stream, I think I did probably no more than 30 trade ideas, up to 30 trade ideas in stocks and in futures markets. But it's important to note, and it's important to understand that when you're trading the markets, you want to be able, okay, to be consistent. My 5 keywords: consistency, discipline, confidence, patience, and passion. Okay, you got to have the passion to want to do this. You got to be consistent each and every day. And more so, what you want to do is you want to have the discipline, and you want to have the confidence. And the confidence that I tell people all the time is when you get the ability to learn from me, use my software, you will gain the confidence in understanding my methodology. Okay. Again, does anybody have any questions? If anybody has any questions, you can text me or call me at 914-500-7484. Gold, let's look at gold here. I want to show you the GLDs today. Okay. This is the gold. Again, when you're trading the underlying, when you're trading the futures markets, it really is important that you use the ETFs. Okay. My research has shown me that when you're trading the S&P futures during the U.S. session, I look at the spiders, the NASDAQ, the Qs, the YMs, Dow futures, the diamonds, the RTY, the small cap, Russell 2000. I look at the IWMs. Okay, very important. All right, very important. I look at them the same way. Remember, the math on the continuous contract is 23 and a half hours in a day, or 23 hours in a day. It runs continuously, and it shuts down like twice for like 10 or 15 minutes. And then you have the underlying ETF, the spiders, that when you use the underlying ETF, I calculate that in what's called RTH, real-time hours, and I calculate the math on my charts overlay from 9:30 to 4. So, but when they correlate, you can see exactly what happened. So here, we had the gap up on the gold. You get this beautiful bull flag right here on the pullback, and then when the 5-minute time frame reversed to buy, we caught this beautiful long here on the gold, and it ran probably on that one. I think it ran from 11.55. Was trading. It ran almost $15 on gold, which is $1.50 on the GLDs. It's important to use the underlying ETFs when you're trading the futures markets, and when they correlate, you better be going in that right direction. It's just really very, very powerful. And if you look, like I said, at the 130 bar, if you look at the the 12, what time is this right here? This is the 1245 bar, I believe. Beautiful pattern. Again, it was the first pullback on the 5-minute time frame after the where the gold futures correlated, and this is now the first pullback on the 5-minute after the 5-minute correlated to buy. So once this 5-minute correlated to buy, and then we look to buy the next pullback. Beautiful pattern. Gold ran from below 64, 26.64, all the way up to almost near the 26.80 mark. Again, it's important when you're trading futures to look at the underlying ETFs. It's beyond important, beyond the understanding of how when they correlate, you're going with the tide, not against it. Again, it's all predicated on using my my indicators on those 3 time frames, the 15, the 30, and the hourly time frames. There are occasions where, for example, the 60-minute time frame is bullish, but the 30 and the 15 are bearish. That would be deemed a disconnect. Anytime any one of the 3 indicators on the various different time frames is in sell mode. You're talking now with disconnect. Okay. All right. Does anybody have any questions here at all? Anybody? Nope. Okay. All right. Gold just ran about $1.40, $1.50 on that last pullback. Now, what's really important is to hit your goal each and every day, set your goal, and then stop, paper trade, learn, keep practicing. That to me is really where it's at. To be able to understand the pattern, understand the ability of what is a pattern going to make a new high, is going to make a lower high. Are we in a situation that we may not get a pullback? And there are a lot of people who like to scalp the market short, long and or short. And with the thing I would have to say with that regard, is when you're trading the market, and you're fading it, you have to have tight stops. If you're fading the market because you just think they're way overdone, and you see some divergences that you're on your own doing, but it's really important to understand that when you're trading, you want to be able to identify the right pattern. You don't have to do 100 trades a day. It's just getting those 2, 3, 4, 5 great patterns in a day, right? Like gold, I just showed you. Here, gold just rallied $2 off the 5-minute time frame, So if you bought the GLDs here, and the GLDs just ran 20, but gold just ran north of $2 here, Again, what's important is you got the big buying pressure. You see that the 15s are, you see that the 15-minute time frames are trying to get somewhat oversold here. Again, very, very bullish ADX here. We're in the 41 range right now. We're in the 41 range, 41.16. And, it's important that when you look at the market, if you make, you should set a goal, whether you want to make 5 handles a day, 10 handles, 8 handles a day, 10, 12, 15 handles or points on the S&P. On the NASDAQ, which moves sometimes 100. I saw one day last week, down 100, up 100, down 100, up 100, down 100, up 100. 300 points, like nothing, right? So gold just ran north of $2 here, $2.40. So again, getting oversold here in the algorithm right here. You can see the low here on that bar. But again, because you're seeing the big buying pressure, you have a plus 19 on indicator 2 right here, and the MACD is positive, the ADX is rising. You may get one more push up before they get kabooshed here one more time. Let's see. All right. Does anybody have any questions? And again, please feel free to reach out to me if you're new at trading futures, if you just want to be able to learn futures in any way. Tradier, it's got a great front end platform, great firm, great margin requirements, and it's a great honor to be here to do this every Tuesday and Thursday from 1:30 to 2. All right. Again, my number is 914-500-7484. If anybody has any interest at all, I'm more than happy to help in any way possible. S&P futures. So let's just say, for example, if you bought at 84.5 just now, and I gave a range 79.5 to 84.5, and just ran just 2 points on one big one, you just made yourself 100. On one small one, a micro, you made $10, $5 a handle. Does anybody have any questions at all? All right, there goes gold pushing up. Gold just rallied $3 just now on that pullback. All right, beautiful. So if you bought one lot in gold, you just made $300 in gold. Beautiful pattern. This, in my opinion, trading futures is the way to go. You don't have to have the outlay of so much capital in trading like a Microsoft or any of these big cap names, right? And you don't have to worry about the PDT rule, right? The rule where you need to have $25,000 in your account or more. All right. I have a special request here because we're going to cut the show about 3-4 minutes earlier. I will see you Thursday at 1:30, between 1:30 and 2. Thank you for joining me here at Back to the Futures. Again, I'm looking for sell divergences combined with the overbought conditions. I'm thinking we're going to get a nice pullback in the next 1 to 3 days here. Again, setting up a higher low. Have a great day, everybody. Continue to be successful. Be consistent each and every day. It's important. And if anybody has any questions, please, 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 I answer all texts or questions. Have a great day, everybody, and God bless you. And welcome to Tradier Futures. Phenomenal, phenomenal product here at Tradier. Have a great day, everybody.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.